Welcome to the StockMiner.com studios in the Black Hills of South Dakota. I'm your Stockminer Brian Johnson, and we've had some pretty good wild action here the last couple of days. For those of you that have been with us the last week, you can see the move that we had down coming into the weekend. A little bit of a pop here. Now this was interesting. We had this little bit of a pop on Friday, and it actually looked a lot more than it was. I mean, if you watch this on like an intraday perspective, it was literally straight up all day long. One candle after another. But then when you backed up and looked at it on a bigger picture, yeah, not so much. Nothing really broken from the bear side in the least bit, and we saw a continuation of that into this week as Monday started out, and it was very bearish. Internals confirmed, everything just basically ground its way downwards all day long. Then today, we get a nice push to begin the day. About halfway through, though, you could see the bullish action start to come in, and then it started to kind of accelerate at the end of the day. By the time we were done, though, I wasn't necessarily convinced of the bull case yet. So, if you guys follow Elliott wave counts, there's a bull and a bear case out there that I think are both very strong at this point. I am not leaning necessarily one way or the other. If you're looking at it from just a pure technical analysis standpoint, I'm actually leaning a bit more bearish at this point than I am bullish. I'm going to make the bulls prove it to me at this point. They have been getting, well, pretty much kicked here for the last week or so, and I'm going to force them to make something happen. So let's take a look at what's going to be needed for them to really kind of sway my momentum back to them again. As it is right now, more neutral bearish than still anything else. So I want you guys to pay attention. We are still in a downtrend. We're coming back up. Not good, not a bad day today, but I'll tell you, the internals really didn't necessarily confirm this hard push up. So there's still, maybe short covering. There's still people that are looking to get short and they're buying or they're selling at these overhead levels. I haven't seen, like I said, what I need yet from the bulls to be convinced that, okay, here we go, bulls are back. So as we run our way downwards, the 12.7, 13.3, talking about it for a long time, that is still the range to be watching. I'm going to throw in the middle line of 13,000. It's a big number to be watching as well. We get back above this, okay, now the bulls have my attention. But until that happens, I'm still watching for breaks down and below these lower levels on all of the indices. The Dow was the weakest today. So the Dow, then the SPX, the NASDAQ was the strongest. Technically, the Russells was even stronger than all of them, but we don't cover that in this particular video. That's only covered in the subscribers newsletter. But the NASDAQ was the strongest today, as you would expect, and it needs to be, even without Apple necessarily taking over. We still have not seen any strength from Apple as it bleeds itself to death. But the NASDAQ did very well today, getting back and almost into that break-even area. At one point, it was break-even, then faltered a little bit at the end. But point being here, the Dow being the weakest still put in a pretty nice push back to the upside. We were down as much as about 200 points as we get near and into that 12.8 mark, all the way back up today to finish only 76 down. So not a bad retreat. I say only 76 because it's really not so bad when you look at it in the grand scheme. Coming down from 13.3, we're still salvaging a little bit of respect here, but at 400 points lower, away we go. These wicks are nice. Some people point to these as a bullish indicator, and it's true. You can look to that as a bullish indicator. I really am not sold on this at all right now. This little bull run we had at the end of the day, not sold on it yet. We still might have a little bit more upwards action to go. That's fine, but until we break 13.3, I'm really not all that concerned. I'd really like to see them back above these moving averages. That'll make even more of an impact. But really at this point, it's still straight sideways. Your areas, if you want to be the more conservative trader, 12.7, 13.3, period. If you want to play around in between, then keep your position sizes smaller. Don't be jumping in with 1,000 shares or whatever you normally trade. Stay with half of what you normally do and just try to pick and poke and prod this market into giving you a couple of dollars here and there. That is by far the best and safest way to do it. From an NDX perspective, look, we broke down below this 2625 area that I've been watching, even below the 2600 area that I've been watching, only to come all the way back up again and reclaim that 2625. I really like this level down here. I'm going to leave this in for you guys. I want you to mark this on your charts. This will be a big area for the bulls to try to retake. Back above us is 2670 or so. I'd like to see it back up into that. And really back above 2700, now maybe we've got something to work on from the NDX perspective. If we take a look at the daily on the NDX, look at this really nice, and I dropped this line in here. We ended up in a very nice, what could be a hammer candle. It's close enough. It's not perfect, but it's close enough to a hammer candle here, sitting right on top of some support. Now, it'd be very easy to get lured into, oh man, we are going up tomorrow. But you know what? Until we get some confirmation on that, I am not sold on this candle. Yes, I know. It's a good place for it. It's a hammer. It's large volume. I get it. I'm with you. I understand. Truth is, I'm not sold on it. I am not sold on this, and I'm telling you to be very cautious and not get sold on it either. It had better prove it to you. That's why I'm waiting for the 2650, 2700 area, and then maybe we can start talking about, okay, now maybe there is something going on here with the bulls. But until I see those marks, not falling for it. I'm not falling for it yet. So back below 26 and 25.50 to the downside. That's really what you want to be watching from a short perspective. Keep it in mind, we had a beautiful little drop here. Looked like a nice bull flag. We broke that bull flag, and now we're right back down again. So we could be putting in what this could have been, not sure yet, could have been a bull flag that is really just basically going to turn into a larger bull flag. So this is just going to cover more area. If you're an Elliotician, it's like an ABC correction is kind of what we're talking about here. Point is, I'm just not sure if this move to the downside is yet over. So I'm going to tell you to use extreme caution and don't get sold on these little hammer candle things. The weekly bounced very nicely off of the 20-week moving average. That will be your mark to the short side, especially if you're a swing trader and are looking for bigger marks to go beneath. I'm not a big shorter of the NASDAQ, but in this case, I think I would be hard-pressed not to dabble in a little bit of a short back below the 20-week moving average. SPX on the 60-minute, same thing, looking very like a nice push to the downside, coming back up and into this overhead resistance. Stop there for the day, but we've got to clear 1380-ish, somewhere up in here. Would love to see it above 1390 before I really start getting more bullish on this thing. As you can see, the break of this 55 1350 area down in here is a nice range of support, and even though it was penetrated today, it still held nice. And I'll show you what it's really working on here. If you look at this, it is kind of sitting on and in kind of a bull flag type look. So got to give it to the bulls. They're still trying to claw and keep themselves alive. Right back into the bottom side of this channel makes it perfect. Not only did it break it, but it held it by the end of the day, so it didn't close down here, which is very good for the bulls. Further breaks below this area though, guys, I don't know. I really think that there's some opportunity to hit 1340 and even 1300, 1280. Yes, I said it, the 200-day moving average. You bet. Sure. I'm not so far away from believing that that's very possible. Something down in this area. So further presses on this lower area, it's going to be harder and harder for the markets to keep themselves up. They are tired. It was a heck of a run. Remember this run here? Let's just refresh your memory of the middle December to, I don't know, April run. Yeah, that's a long time. So it's 3.5 months. That's a long time to be going basically straight up, grinding. With the exception of this little pop here, it was basically straight up. I mean, the bulls really had their time. Now, you know what? Let the bears growl. Let them have their moment in the sun. They're coming out of hibernation, literally. So this could be it. And if further pressure to the downside, guys, don't you dare run away from that bear side. Don't get caught in that hole. I got to call the bottom type stuff. You will get your hand chopped off. Period. Don't be that guy. You want to be smart in your trading, especially if you want to survive and make it like a full-time thing. Okay, keep in mind this 1355, 1350 area, be beautiful support right down here. This is actually 1360, I think, is where this one's at, but holding very, very nicely. So I would like to see it back below here before I would tell you to look at a short position, but this is the area to be watching very closely. If we can penetrate these moving averages, 1380, 1390, more importantly, okay, now the bulls have my attention. But until then, I don't know. I think I'm going to let the bears have their day. I'm not going to run away from them too soon. The VIX still hovering in and around that 20 mark. You know how I feel about this. 15 to 20 is complacency. We're staying in the 15 to 20 mark, but we're at what would be the high end of complacency, I guess, here. We're about to break into not so complacent anymore levels. And that's back above 20, but it's got to get above and stay above that level for me to really be interested. And that shoots true for the weeklies as well. If you want to use TA on the weeklies, we are above the 20-day weekly moving average here. I really don't have a feeling one way or the other. Just to let you know, though, that markets were down. Markets were down. VIX was down for the week, but it was up for the day, which is perfect. That's just what you want to see. So there's some good confirmation being done in through here. For the week itself, VIX is still down. So we're still not seeing positive weeks necessarily on the VIX. It's going to have to happen before I get uber bearish on this thing. FAS. Okay, let's look at these. I've just basically split them up. Remember that 12.7 to 13.3 mark we were looking at on the Dow? You can do the same thing with these because it's just following the financials and they're doing the same stuff, chopping back and forth. A little bit different moves as they break up and above these higher levels, but the point of them is exactly the same. You've basically got a low level, a high level, and a spot in between that you're just kind of looking at trading. So we're down at the bottom level. If you guys want to get speculative and go ahead and go long down here and hope for the best, fine, that's great. But your moves in my book are to wait until we get back above 99 or 100 and or below 94. Those are really the best and most safe places to look for your long opportunities. If you're day trading, you can cheat these a little bit in these areas, but if you're going to try to swing trade them and hold on to them, those are my most conservative areas for you to be watching for in your trading, 94 and 99 or 100. Here it is on the daily, much better look. Stay in the top side of the channel, plop, stay in the bottom side of the channel, and here we go again. So waiting for here on the bigger time frames. These are spread a little bit more, but I still don't mind, quite honestly, the 98, 99 levels. It's just you have to watch these moving averages then if you want to get in and stay in for any length of time. The day traders kind of have it to their advantage right now because this thing doesn't move consistently for days and days and days on end. It's up and then it's right back down, and then a couple days up and then a few days back down, and then a few days back up and then a couple days down, and here we go, chop chop. You got to be very careful if you're swing trading this. It will drive you crazy. The best way to trade these things right now until they trade out of these ranges is day trade them. Day trade them. So I still like it below 93, 94, even on the bigger time frames. Here's your FAZ getting into and striking the bottom side of this resistance line that's now holding very, very well. This one here, for me, I think is pretty clear. I really do like it below 20 and above 24. Those are my marks. Those will be my marks on the 60-minute as well. You can cheat, once again, some of these and go short if you're going to be in for the day and out by the end of the day and so on and so forth. That's fine. You can find better entries. But if you're going to be swing trading this, which is what a lot of my viewers actually do, is swing trade as opposed to day trading, 20 and 24 are your marks to watch for. That's where you're going to want to go long or short. Okay. So this, by the way, breaking out of this channel, let me just remind you that this was in this channel since back in December, and we're now finally starting to see it kind of slowly inch its way out of this thing. Really liking this from a bullish standpoint. So this is why there's just things like this that will not allow me to leave the bears quite yet. I like what the bears have done so far. They've been slow and deliberate in grinding this thing down, and I'm just not so sure that they can't continue to grind this thing back down as we move into the rest of the week and even into next week as well. So I'll leave you with that. You have your levels, you have your lines. I'll be back with you on Thursday. We'll talk more about it then. But keep all of these in mind. Make sure you have them marked. Like the videos, try the subscribers newsletter, guys. $28 a month, super cheap, well worth it. Lots of good information in there. I really think you'd enjoy that. And then, of course, The big one is the mentoring. If you really want to learn how to trade, if you're tired of being, consistently beat up in the markets, and it seems like every time you go long, the market runs down, and every time you go short, the market runs up, you just can't seem to figure out what you're doing wrong and why you're doing it, then the mentoring is the way for you. So it's all one-on-one. It's all live, you and me talking. There's no videos to watch. You're not in the room with anybody else, so you can ask any questions you want, anytime you want. It's very, very, it's basically custom fit for you, regardless of your trading experience. I have people that have never placed a trade before go through my course. I have people that have been trading for 20 years that go through my course. So we cover the gambit, and it's all about you and what you want to learn. We cover a lot of basic stuff that everybody learns, but inevitably there's questions that you have that nobody else will have, and that's nice that it's one-on-one, because then you and I can discuss that stuff. If you get into the course, you don't think it's for you, get all your money back. I'm really not here to rip anybody off. My knowledge is worth something. It's worth something, because what my knowledge gives you is the ability to make money. Whereas it's not like, okay, my car's broke, somebody fixes your car, you pay them to fix your car, and then that's it. They don't tell you how they fixed your car. They just charge you again for the same problem when you come back the next time. This works a little differently. This is like an education, where once you have the education, you can use the education to continue to make you money for the rest of your life. For that purpose, I believe my knowledge is worth some money. So obviously, the charge for it, though, as I said, if you get into it and you hate it and it's not for you, fine. You get all your money back. I don't have a problem with that, because, as I said, I'm not here to rip anybody off. So I wouldn't be around very long if I was. I certainly wouldn't have been here the last 3 years. All right, so I'll let you guys go, and we'll be back with you again on Thursday. Please contact me, write me, call me, something. If you have any questions on any of my products, I'd be happy to go over them with you. And we'll talk to you guys again in a couple of days. Bye.